Just because you can doesn't always mean that you should. Here are the top 3 reasons I recommend not investing in a 401k. Reason number 1 is that you don't have an emergency fund set up yet. Life is crazy, y'all. That's why you need at least 3 to 6 months of monthly expenses so that when a rogue wave comes along, you're not going to get capsized. The last thing you want is to be taking on loads of high interest rate debt just to get by. Reason number 2 is that your employer doesn't offer a company match. 401ks are clutch. They are not only tax deferred, but many plans offer what's called a company match, which means that your employer will match you dollar for dollar up to a certain percentage when you contribute to your plan. In other words, it's free money. However, it's important to make sure that if you do have a 401k plan that there is a company match incorporated, because if not, it might actually make more sense to park that money somewhere else like a self-directed Roth IRA. We'll talk about that more in another video. Now, the last reason you might not want to invest in a 401k is if you have high interest rate debt. Let me explain why. When you have a high interest rate debt, say like 12%, it almost doesn't make sense to invest that money anywhere else because you're typically not going to see those returns annually in the stock market. It's not impossible, but it's not guaranteed. When you pay off your high interest rate debt, that is a guaranteed return on your money. Make sure you pay that off first before you start dumping your money into the market. I hope to make a more in-depth video soon, so follow along for more money tips and tricks.